The euro pound here has went parabolic, as I mentioned the previous video or the video before, due to the inverted head and shoulders here, and it has reached a very strong resistance level. If you watched here at this point, and all of these resistance here, so I believe it may go down now, as especially that the stochastic oscillator here has been overbought, and it's going to go down probably alongside with the euro dollar. All right. I'm not advising you to take this trade, but I'm thinking loudly and telling you what I'm going to trade or how I'm going to look for to the market next week. So the euro dollar here has been very overstretched, and the nice thing that it has closed last week with an indecisive candle, and it failed to close for 2 weeks higher than the previous high here. So, and also this is a weekly chart, and I see here that there is a projection between this purple line, and that purple line here. So it has formed 100% Fibonacci projection. Okay, to be honest, there's the two possibilities uh, are found. So the price may go a little bit higher if this projection went from 100% to 121. It may go as high as 1.19. I see very difficult from this point, but fundamentally speaking, it's the euro dollar is not good at all. Especially with the war, it's going to be very hard to see bullishness on the dollar. But if we hear some good news next week, it's going to be. I believe the. Let's go to the daily here. Okay, so if the euro dollar have mentioned last week and the video before that if it broke this trend line, very strong trend line, I'm going to be bearish. I'm going to be shorting on the pair directly. So because I see a very strong possibility that the price may go down to this level, at least going to retest this level again, this support level, which is around 500 or 400 pips. It's a very good trade. So if it broke this line, I'm going to go bearish, rush into bearishness, especially that it's overbought here in the stochastic. For the pound dollar here, as I told you last video and the video before, that it's forming a rising wedge and it's about to break it, which has happened last week. All right, this is the daily chart I'm talking here, and I believe it's testing the previous resistance level, which is going to be the new support level. And I believe if it could break this level, it's the previous law here, which is support at the same level, is going to be very open to the downward. I'm continuing shorting this pair. As you know, I'm a position trader. I have my trades takes like around a week or so. So I'm continuing to short this pair, and especially if the euro dollar has broken the green line that I have showed you, it's going to be a great chance to for this pair to go bearish also, especially that the fundamentals are very good. The fundamentals of the pound dollar are way better than the euro dollar. If you were a subscriber to my channel, if you were following or watching all of my videos, you would have remembered that I have talked before about the dollar Canadian pair, and I told you that it has formed a high, many. This is the monthly chart, and it has reached the highest high since the year 2003. And I said before that it's going to be a great chance to short and take a very nice profit from this point. It's like 1,000 pips, okay, almost. And look at these for one, two, three, four, five, okay, for continuously 5 months. And this is one of the benefits of being a long-term trader, that you set a trade and you make the analysis one time and you forget it. So around 1,000 pip here, it's a very nice profit, and I believe it's there will be chance to go lower also. There will be chance to go lower. However, there is a very strong support level here. It's not going to be easy. It's going to be something like that. So moving to lower time frame on the weekly. Okay, so on the weekly level here, it has reached this support level, and the stochastic is oversold also. So I'm going to wait for the next few days. I believe it's going to see some strength here in this point. I'm going to wait for the stochastic to go higher, and once it starts to bounce down, I'm going to continue shorting. So I'm not going. I'm going to, as they say, buying the dips, but opposite to that. Quite the opposite. I'm going to wait for it to go up, and I will be shorting again. All right. Let's see the daily chart here. Same picture. Okay, same picture. There's no. So I believe it has formed a falling trend here, or some kind of wedge. Let me draw this. It has formed some kind of wedge here also, or falling trend if you would like to call it falling trend or falling wedge. All right. So I believe it's going to go. It has broken it and closed above it. I believe it's going to go higher for a while. It may retest the previous resistance level. All right. Then if you didn't short, it's going to go to be a great chance to short it from that level. But we'll see what will happen between now and then. Again, I'm not advising you, but if you were following me and if you were subscribed to the channel, you would have learned a lot from this channel. Um, as I told you, I'm not a financial advisor. Do your math before you take the leap and jump into any trade. Talking about tendencies, I told you I have shared this shape before with you. This is the Nasdaq, and it has formed two indecisive candles here after a rising wedge. This is the weekly chart as I'm talking. Okay, and of course, these days are not very good for risk on the U.S. markets. Okay, same for the see S&P. Same situation here. Uh, I don't think anybody is going to be enthusiastic to jump into the stocks markets these days. Talking about the war, let me review historically what happened during the World War II. This is the monthly chart. 1940. Okay, 1938 was the start of the World War II till 1945. Preceded by the Great Depression, 1929 here. And once the stock market start to recover, the War II started, and actually it has been bearish for a while before the war. Probably the people knew that this is a preamble for the war. And in the war itself, the price didn't move a lot. Nobody sold. It seems like the people who wanted to sell have sold before the outbreak of the war, and nobody, of course, was excited to invest in the stock market during the World War II era. And this is 1938, 39, 30, 40s, and 1942 when the it started to the picture was clear that this allies were took the lead of the war and started to win, and the price started to be bullish here, and people got enthusiastic. This is 1945, the end of the war. All right, and it continues to rally after that. I just said to share this picture with you. I found it interesting to share this part with you. Let me see here. The daily chart of the UK FTSE 100 also it's bouncing and starting to seems like it's very eager to go lower. All right, let me see the current here. Same for the French index, CAC around 40. Okay, the Swiss one. All right. So whole of the whole of the markets are like that, and it seems like the U.S. is the strongest. This is it again, and I believe it's for me it's not a good idea to go along on the S&P. So that's it for today, and thank